Guillaume Prache, Managing Director, Better Finance. You represent the consumers of financial services. Are you pleased with today's proposals from the Commission?
To be frank, this proposal on the reform of European financial supervision is very disappointing for us overall. There are some good things, but overall, we don't think it's an improvement for the users of financial services.
What changes would you like to see?
So again, there are some good things. There is a strengthening of the governance of the ESAs by inserting some permanent members in the management boards. There are increased powers, capital market supervision powers for ESMA, the European Securities and Market Authority. But what we would like, and it's not we would like, we have been asking for many years, and we are not the only ones, is a move to a more effective consumer protection, retail investor and consumer protection. So first thing is to end the silo approach of the ESAs. You know, one ESA is responsible when you are sold securities and funds. Then it's another one which supervises people who sell you a life insurance or a personal pension. And it's another one when it's the intermediary is selling you a bank saving account, for example. But guess what? The intermediary is selling all of that to you. And so it is a very compartmented approach that is making the protection of retail investors and consumers not consistent from one product to the other. That's the first problem, and we would like to end this silo approach. We would also, and even more importantly, move to what they call in their jargon a Twin Peaks approach of supervision, which means there would be one supervisor for financial firms who will look at their financial strength, stability, security, and one supervisor, like in the UK, like in the Netherlands, like in the US, who will be only looking at conduct of business rules and consumer protection. Because if you mix the two, which has been the case for the last many years, we still have a lot of misselling cases, dramatic cases. Why? Because the supervisors, and they recognize it, and the Commission has recognized it itself in its consultation paper on this reform, they are focusing and prioritizing, what is called prudential supervision, which means the stability of the financial firms, not the interest of the retail clients.
The objective behind this proposal is to improve the capital markets union. In order to do that, we need investors like the people you represent to invest in shares and equities and other funds. Is this going to do it?
Yes, well, I would have hoped so. And in fact, yes, it's interesting to see that the Commission is reminding us that this is part of the Capital Market Union initiatives, which aims, as you said, as getting savings more directly into the real economy, especially through shares investing. The problem is we don't see in the proposal today the link with the other CMU initiatives, because to do this, you need to restore confidence of retail investors into the financial system. And I don't see big measures on this. You need also, and that's another capital market union action, the Commission has asked several months ago the ESAs to enhance the transparency on performance and fees of savings products. It has asked it, but now we have a reform of the ESAs and it's nowhere. You can read the 300 pages of the proposed regulation. This CMU action is not there. So that is not encouraging.